Today could be perhaps a further step back because the global setup is looking a little bit shaky. The risk of trade clearly seems to be under play. The 10-year yield is now at November highs. Brent crude is now at a 5-month high, and we are almost nudging that $90 per barrel mark. While gold, of course, continues to hit record, a day after day. Bitcoin has had a steep fall, and US equity markets have taken a bit of a step back overnight as well. Asia pretty much is mirroring the same sentiment too. But yeah, for the US equity markets, it's been a 1% slide that you had in the Dow. In fact, at the lowest point in the day, it was down about almost 500 points, led by Nvidia and Tesla. S&P 500 index as well has seen quite a sharp fall, as has been the case with NASDAQ. So clearly, that risk of trade seems to be at play, and it's a bit of a confusing scenario with asset classes right now, with gold, crude, Bitcoin, all the moving parts.
So it's a bit of a global versus local situation for Indian markets today. Look, the corrective action which everybody has been talking about in the global markets, that has kicked in. Of late, US markets have been very resilient, very, very resilient. The economic data, frankly, has not been extraordinarily strong for US economy post-October, but US markets have been remarkably resilient. I don't think you can say that, okay, the trend has reversed for US market just because Bitcoin is down and yields have popped up. You would wait for some further evidence of any sharp reversal to make a case that for 2024, the US equity party is getting over. That said, if I compare Indian markets versus US markets, we've had a couple of good days. We are at a reasonable level in terms of the Nifty positioning. The small and mid-cap stocks have seen a sizable comeback. Now, we corrected despite strong global cues in the month of March. Global cues were strong and supportive, and Indian markets did see that massive sell-off and a massive bout of unwinding. So are we likely to get pegged back because of global cues? Yesterday we got pegged back and then we recovered. Or this kind of a downward start for Indian markets will only act as a great entry point. I would continue to bat for the latter, because the way I look at Indian markets, and let's look at a YTD comparison here. First, let's be clear, this is just like a mild corrective action. So it's not that world has changed for US markets. I think it's too early to blow the trumpet that inflation is back. Yeah. Please don't blow that trumpet. Third, Indian markets have corrected irrespective of the global strength in the month of March. And fourth, the lay of the land for Indian markets, I think, is looking far more appealing, because earnings season, election, everything is tied up in terms of triggers. So I think you have to be a buyer in this market rather than saying, okay, global markets gir raha hai and we're going to fall. No, I think it's too early for anybody to pass that judgment.
Okay, be a buyer in the market. And just to elaborate a little bit more on yesterday's trading action, here's what happened. We snapped that 3-day rally, so we did wrap up the trading session in the red. It was very mild in the at 22,453, so a flattish close. And there was a buy on dips that we witnessed in the last hour of trade. The broader markets, though, that's where the action continued. So 7 straight days of outperformance there. The Nifty mid-cap index continued to outperform. There was a healthy market breadth, and here's what stood out. The typical rate sensitive, so realty, metals, all of that continued their winning streak. It was a little bit sideways for the Nifty Bank ahead of the MPC. So Nikunj, given that you're saying that the buys should continue to be on the stronger side and that we should have a buy on dips, where is it within this market basis the kind of trading action we've been seeing that investors should be putting money?
Okay, so let's look at the gainers and the losers. What has recovered? For me, that is an indication of strength. Now, it's Torrent Power, Scale, Prestige, and then you've got BSC, mid-cap. Small cap, you've got Swan Energy, Defense, Real Estate. I mean, it's in that space. Kochi Shipyard, pure defense. Apar Industries, energy transmission. So what has recovered in this downtick? A is real estate, B, metals, and 3 is defense. Metals largely because if at all the fear of inflation comes back, which it might, because crude is going higher, metal prices going higher, whether it is coffee or cocoa, things are looking up. So obviously metals become this go-to space for trader. Real estate becomes this go-to space where you are getting momentum and you're getting traction in terms of the money moving in. And C, I think good old defense. I think defense is just the real leader in this bull market per se. What has not made a comeback? That is also important. Well, banks have not made a sizable comeback post the decline. NBFCs have made a very selective comeback in this decline. Autos have made a selective comeback in this decline. But for me, the leadership in the market where you need to buy in the decline in the short term, I'm talking about next couple of weeks and next couple of months in the run up to the election per se. I think it would be a combination of defense, energy transition, and to a large extent real estate.
Oh, yeah. So wondering what the positioning or strategy for the day should be. Any dip you think it should be selectively bought into?
You should buy closer to the support level. The way I look at it is that you've made a new high. Global cues have pegged you back. Yesterday we ignored the global cues. You will be retesting the low levels. So you want to be a buyer on the bad day, but you want to be a buyer closer to the support level, because closer to the support level, I don't think support levels are going to break in a hurry. B, if support levels are not going to break in a hurry, and if market goes and retests those support level, you will see some scramble here and there, and I think that is something which you should use to your advantage. Look, it is a market where you are getting individual stocks which are really delightfully surprising you. For example, on Monday it was the whole cahoot of metal stocks which did very well. Yesterday it was largely the Aditya Birla Group companies which did very well for themselves. So you have to pick your spots in this market, but a good entry point I think would be closer to the support level. And mark my words, Aisha, let this market fall and the FOMO crowd will come in. For those who sold out in the month of March, I mean, they're feeling, humne kyun bech diya? So my sense is when I speak to everyone is that the FOMO crowd, I think, is a very large in number. They're just waiting for one bad day. Until unless something really cracks globally, I think the FOMO crowd will come back and say hello. I think they're waiting for that hello.
Yeah. And
If you like this video, then like, share and subscribe to ET Now.